Hello everybody, welcome back to my channel, Trading Secrets. This channel is for entertainment purposes only. For those of you who do not know, my name is Ali. I have over 20 years experience teaching accounting, economics, business and law. And through this channel I'll be providing some stock analysis and a quick update on the $1 Million Challenge. So if anybody's not aware of this is a journey of an investment of $1,000 to a return of $1 million over a period of 3 years using a strategy called compound return investing. So the objective is to try to get 201 trades, each with an average return of 3.5%. It's not 201 consecutive trades. We do take into account losses. So for further information with regard to how to join us in the challenge and also details about in-depth strategy, information is available in the description below. In the previous video, we did an important update on Tiximo BBIG, Vinco Ventures. So please refer back to the previous video for an important update on the special dividend for Vinco Ventures. And we also did a comparison with how the special dividend was treated with Torchlight Energy in terms of some important similarities and differences. So that's covered in the previous video. In today's video, I'm going to be looking at the earnings that have just been released for Metamaterials. So before we do that, let's have a quick update in terms of the market. So just a quick headline here from Reuters on the screen here. You'll be able to see the S&P 500, NASDAQ end up, but investors are still cautious before inflation data. So although we are seeing that the S&P 500 is only up 0.3%. So again, the stock market is still jittery and we've not seen a significant recovery so far. This video is sponsored by Skillshare. Skillshare is a website for creative and curious people, lifelong learners, beginners and professionals. It's also an online learning community with thousands of inspiring classes for everybody who loves learning. Some of the key benefits of Skillshare include it being ad-free, and it also has new premium classes which are added every week. Let's now head over to the Skillshare website and have a look at some of the key features. So on the screen here, you'll see as soon as I get to the website, I get a message here, welcome back Ali, you are ready for your next lesson, question mark. So as you can see on the screen here, I'm currently doing a lesson there which I'm going to share with you shortly with regard to automated trading bots. So further down, as you can see on the screen here, there's also a recommended for you section, and that includes things that I may be interested in, such as Binance, cryptocurrency, and how to invest and profit with crypto. Going further down, I also follow Adobe Illustrator, so I have recommendations there for Adobe Illustrator. I'm also interested in Photoshop, so there's pretty much any courses here available for almost any topic, from trading to tap dancing. And further, if we go back up, we also have sections here in terms of on the browse section where you can search here. You can see topics here include music, illustration, graphic design, marketing, lifestyle, productivity. So there is almost everything here for anybody who's interested in learning. I'm now going to share with you on the screen here one of the new courses that I've also just started. So the title of this course is BitsGap Cryptocurrency Bot Trading Course 2022. So on the screen here, you'll be able to see, so as soon as I've completed one of the video courses, I get a tick. So we have an introduction, what is BitsGap, how to sign up with BitsGap, all the way down. Once I've completed it at number 13, we'll have a section on my exchange management. So this is something that is I'm currently following. So if you look further down, I get an overall project description. I can read reviews, I have a look at the discussions, as well as the student projects. So this is an excellent site if you want to increase your learning. The final thing I'd like to say is the first 1,000 people to use the link in my description below or the code Trading Secrets will get 1 month free trial of Skillshare. So please go ahead and join. Let's now start by having a look at the quarterly report published in Form 10. So we're going to start by looking at the key assets and liabilities recorded in the balance sheet. So on the screen here, we'll be able to see a comparison on the right with the data from December the 31st, 2021 to the current period, March 31st, 2022. So in terms of overall assets, these are slightly down. So previously we had assets just in excess of 434 million. And now these have declined to approximately $414 million. So some of the key changes I can see here is in terms of cash. The business previously had in excess of $46 million in cash, and now in cash and cash equivalents, that is down to just in excess of $29 million. So quite a significant decrease there. The other thing that I can see notable decrease is the assets held for sale. For Torchlight Energy, previously these were indicated with the nominal value of just in excess of exactly $75.5 million, and now that's been reduced to $72 million. So let's have a look at the liabilities at the bottom. So the good news here is that liabilities have gone down by approximately $7 million. So that means the company has less debt. So if we compare the overall assets with the liabilities, the company is in still a very, very solid and strong position, and easily able to pay its significant debt. So one of these debts is the current portion of the preferred stock liability of 72 million. So although this is recorded as an asset and a liability, it does cancel itself out because obviously this has to be recorded on the balance sheet until the transfer or the sale of assets has been completed, and that will allow us to receive our special dividend. So the other key differences here in terms of current liabilities, these have gone down from 13 million now to 9 million. So that's a notable difference. So overall, a healthy balance sheet. Let's now move on to have a look at the trading account, so also commonly known as profit and loss. So on the screen here, we'll see again similar comparison with the previous year, comparing year end 2021 with the current period of 2022 ending March 31st. So the first key figure here is with regard to revenue. So we can see on the screen here, total revenue previously was just over $500,000, and that's increased quite significantly to just in excess of $2.9 million. So that's a very significant increase, very, very close to 300%. And the other notable increase here is gross profit. So previously gross profit was just in excess of $595,000, and gross profit now is in excess of $2.1 million. So the important figure is not gross profit, but net profit or net loss. So previously we had a net loss quite significant of $44 million at the bottom, we can see in brackets there, and now the net loss is $18 million. So although the net loss is quite significant, what we can see is a very, very significant improvement here in terms of the net loss. So it's much, much lower than previously reported. So overall that is good news, but let's have a look at some of the key differences in these accounts. So one of the key reasons for the reduction in the net loss, first of all, we have seen a significant increase in revenue, and obviously this has been a positive factor. In terms of the key differences in terms of expenses, previously total operating expenses were just in excess of $4 million, and now they're approximately $19 million. So the general administrative has increased quite significantly. We can see previously it was $2.5 million, and that's gone up quite significantly to in excess of $14.5 million. So that's quite a significant increase there, and so overall moving in the right direction. What I'd now like to do is delve a little bit deeper in terms of breaking down the revenue and how the company are changing. So again, section 15 of the accounts, we can see here a breakdown of the revenue. So comparing 2021 with the current period 2022, we can see product sales have increased quite significantly. So previously we're looking at just in excess of 22,000. These have now increased quite significantly in excess of 168,000. But the key significant difference here is the second figure here, which is identified as contract revenue. So that was just in excess of 400,000, and that is now in excess of $2.7 million. So that is the key difference. So that does indicate that there is a significant contract. Obviously we do need more. So that's the key difference there. So previously overall we're looking at 596,000 to now an increase to a new figure of 2.974 million. So let's have a look at how that is impacted from a percentage point of view. So if we look at the revenue and gross profit results of the operations, we can see here in terms of the key changes on the percentages on the right. The key one here is with regard to total revenue, which is the third one down at the very far right, and that is an increase in revenue of 399%. So overall good news, and the bottom figure there is also something important from a gross profit point of view. That's also increased just in excess of 269%. But overall, to be realistic with regard to these results, the company is still not showing enough profit, it's not showing enough revenue, it's not showing enough contracts, but it is moving in the right direction. What I'd now like to do is finish off by having a look at the updates with regard to acquisitions and preferred stock liability, with particular emphasis on any clues with regard to the special dividend or clues with regard to how close they are to selling the assets. So let's start by having a look at section 3, which is looking at acquisitions and preferred stock liability. So with regard to Torchlight, what the company have stated here in the accounts is that on June the 28th, 2021, we and our subsidiaries Canco and Calco completed an agreement where we acquired all of the outstanding common stock of MMI, and the former shareholders of MMI acquired approximately 70% of our common stock. So at the bottom we've also got a statement here with regard to nano acquisition. I think this has been the key strong point with regard to the company in terms of allowing it to generate significant revenue. So that's definitely one of the most positive aspects of Metamaterials, the acquisition of nanotech. And then the third section here in terms of other considerations, what they've also said here is, as of the period ended March 31st, 2022, no changes have been made. So the provisional purchase price allocations of the Torchlight RTO and the nanotech acquisition. So again, they're not identifying any changes here. But in the final section, what they are saying is that we believe the information gathered to date provides a reasonable basis for estimating the fair value of assets acquired and liabilities assumed. However, we are waiting for additional information necessary to finalize these fair values, including assessment of any tax assets and liabilities. And the final bit I would like to look at now is section 5, and that is with regard to the assets for sale. So on the screen here we can see what the company have said is, as of March 31st, 2022 and December 31st, 2021, assets held for sale represent the acquired oil and natural gas properties from Torchlight RTO. So that's basically the key thing that most people who are holding MMTLP are looking for. In terms of the Orogrande Project, West Texas, they have still confirmed here in terms of their drilling obligations, which includes 5 wells in 2022 and 2023. All drilling obligations through to the 31st December have been met. So again, the company is stating that as good news. So I'm sure that is what we all expected them to do. The drilling obligations are a minimum yearly requirement and may be exceeded if acceleration is desired. So the other things of note we can see here at in the middle of this section 5 is with regard to the Orogrande Project. So in terms of ownership, as of March 31st, 2020, it's detailed as follows. So we have revenue interest, working interest. So we know that the university lands are the mineral owner of the land, so they have revenue interest of 20%. And then we have Hudspeth Oil, which is something that was covered in a previous video. So they have revenue interest of 49.88%, working interest of 66.5%. And then in addition to that, we have Wolfborn Investments with revenue interest of 18.75%, working interest of 25%. So let's go a little bit further down with regards to the Hazel project. So quick update there. So they are saying, as part of the review of the fair value of the Hazel projects as at March 31st, 2022, they've obtained the new engineering reserve report prepared by P-Tech Enterprise Limited. So they're looking for fair valuations. And finally at the bottom, what the company have also said, to reserve estimates made in the engineering reserves report, those were lower than previously made and used in valuation of the Hazel project. So overall, no breakthrough in terms of confirmation in terms of what's happening for the special dividend, no confirmation of what's happening with regards to sale of assets or transfer into Oilco. But I think what the company are doing is confirming here that they are meeting the drilling operations, they are breaking down the costs in terms of the revenue interest, and they've also said in due course they will give us the information through the official channels. Finally, thank you very much for watching. Please stay tuned.